What's up, guys? Welcome back to today's YouTube video. Yeah, as you can see, the title is written "How I Mastered Trading Gold Using ICC." Basically price action and market structure. But ICC, which is a concept by Trace by Sai. Most of you guys know him. Yeah. So just to give you, how I was able to catch some of the moves. I was able to catch this move to the downside, and I was also able to catch this move to the upside. Yes, things like that. Also, there was a move that we caught from here to the upside, but I'm just gonna give you a brief, breakdown of these two moves which happened yesterday and today. Yeah. So I'm just gonna be doing that. Get what I'm saying? Right. So what is ICC? So basically ICC is when price goes up, probably, price is in the trend, price goes up, comes back and correct, which breaks the previous higher high, and then price continues to the upside. So basically ICC stands for indication, right? Indication, correction, and continuation. Some of you might know these terminologies by in price action, mostly indication is usually a breakout. And then correction is usually known as a retest. And then a continuation can either be continuation or a reversal. You get what I'm saying? So this is what ICC is all about. You get what I'm saying? So back to what how you can spot ICC, right? So let's say you're on a higher time frame. Usually, to find trends, you can usually use the 4 hour, the 1 hour, and then the 15 minutes to find trends. This is where you can find trends, right? So with that being said, you have price breaking a swing point. What are swing points? Swing points are points where price was giving higher highs or higher lows or lower lows and lower highs. In this case, we had price giving us a higher high at this area, right? And then we had price giving us a higher low at this area, price coming from the downside going up, right? So whenever price breaks above a higher high to the upside, price then gave you an indication. So we call this move, all of this move here to the upside, we call it the indication, where price then gave you an indication to the upside that price above this high would be bullish. You understand? So we can expect price to come back and correct price, which is a retest. Just like I said, price, some of you might know it as a retest, which price can come back and correct this movement, right? Let me just change the color, right? So we can expect price to come back and correct this movement, the breakout which happened, or the indication which happened, and after price then created a new higher high. You can expect price to also come and create a higher low. You get what I'm saying? A higher low. So what does ICC say? ICC says anything above where price has shown you an indication or where price did break out. You understand? Anything above that level, price would be bullish. So you can look to be able to take positions to the upside from that area. You get what I'm saying? You can look to take buys to the upside probably until aiming at this swing point or until the next swing point based on where the previous swing point when the chart was falling down is at. You get what I'm saying? So those are the kind of moves you can add to it. So I've added my twist to the to the strategy because I feel like some people they just enter and end up getting just enter buys or sell, on the in continuation they just enter and then they end up getting caught on the move. You get what I'm saying? They end up getting caught on the move. So for you to be able to avoid this, I've added my twist to it, right? So I've come up with something that I would want to see in terms of correlation, right? So once you found the trend and understanding where you are, you're waiting for that continuation to the upside on the higher time frames, right? So I've then introduced an entry method, right? An entry method where the entry method says, right? The entry method then says, I would want to see correlation of price, correlation of price between higher time frames, right? Between higher time frames and lower time frames or smaller time frames, lower or smaller time frames, right? Right. And what do I mean by I want to see a correlation between the higher time frames and the lower time frames, right? So let's say you found this move from 1 hour or the from the 4 hour or the 1 hour, right? So now when you go down to the 15 minute, you find out while price was correcting to the downside, it was giving you some sort of a trend, which is giving you lower lows and lower highs, lower lows, lower highs, and then a lower low price that'll give you a lower high, and then a higher low, and then higher high, higher low. And then price, when it broke above this level, where it showing you that you can get an indication and price comes back to the downside, it must also give you a higher low. So it can indicate that it is indeed bullish also on the smart time frame. So this high here at the top, you can be able to mark it the high created at the top and wait for price to give you a higher low. And then use that as your buy stop area where you're going to place your buy stop area and then aim for whatever you want to aim for. But recommendedly, I would aim for 1:3. You get what I'm saying? So once you can do that, I always preach 1:3 because it builds good trading habits and it helps you with dealing with greed. You get what I'm saying? So once you hit your 1:3, 3 trades a day, you're keeping the bad days away, right? So this is what I want to see. Same thing happening also on a downtrend. If a trend was on a downtrend, right? Indication, correction, and then continuation, right? So we'd have price also breaking below the lower lows on the higher time frames. We have a lower low here, right? And then we have a lower high here, right? And then same thing happening where price also gives an indication by creating a lower low, and then price goes ahead and then corrects price and give you a lower high. You get what I'm saying? So same thing also, I would want to see, like I said, this would be the this would be the correction. And then this would be the indication. I'll change the color right now, right? This would be the indication, right? So with that being said, the indication break below a lower low, where it's a breakout, like I said, price would break out, indication breakout, and then price would then go correct price, which we call a retest, right? We'll go retest on a higher time frame, giving you a lower high to show that the trend it is indeed bearish. And then also with the entry method that we have, we'd want to see price break below here. Obviously, having a lower low and a lower high, and then you can take those trades to the downside. You're gonna mark the first lower low being created below where you got an indication where price broke below, right? And also, don't forget to include the wicks. Don't mark the bodies only. Include the wicks if it's on a higher time frame. Include the wicks, right? And then use that to capture your move to the downside. Your stop loss just above the lower highs, and then 1:3, you out. You don't need to be riding the whole moves. You understand? You don't need to be riding the whole moves. So same thing here, stop loss just below the higher lows. So you don't need to be riding the whole move. So this here helps you with the correlation that I was talking about. So you're gonna have a lower low being created on a smaller time frame, right? You're gonna have a lower low, probably a 5 minute or 15 minute or 1 minute be created, and then you're gonna also have a lower high being created. That's where the stop loss is just gonna be above the lower highs when you're taking a sell to the downside. And when you're buying, you're gonna have a higher high being created and then a higher low. You wanna see this a higher low being created, and then your stop loss just below the higher lows being created on a smart time frame. So you can use these to be able to capture those nice, excellent moves, snapper entries to be able to, scale up to the upside or the downside. So coming back to everything else, I'm just gonna delete everything else that we have here, right? So with that being said, I'm just gonna do a bar replay because we're on the 1 hour time frame. So I'm just gonna do a bar replay for the first entry that we had, right? So we can see that, okay, price made a higher high, made a higher low, and price made a lower high. So now this here, we're saying price can go to the downside on the 1 hour, right? But then we went down to the 15 minutes. So this is where things got a little bit interesting for us. You get what I'm saying? Price, when you go to the lower low, when you go to the lower time frame, right? We saw that on the 15-minute, price broke a higher low, giving us an indication below this level where price showed us that any below this level, it is willing to sell. You get what I'm saying? But also, when I went to the 5 minute, the reason I say you must include the weeks is because of this thing, where on other time frames there is action that took place. There is candlesticks which are lying there, right? We have an indication price went up to correct, but then because of this consolidation that was happening here, I wanted to see price break also below this level, give me a lower low and lower high. Reason being, price was consolidating below this level, so I don't want to just take any trade that comes below here with a lower low and lower high because it has potential to also go up the same way that these ones are, right? So that means there's a level of buyers which are sitting here at this level of support, right? So I want to see price actually, I don't want to see price break above here. I want to see price come break below with a lower low and a lower high, and then I can take it to the downside, right? So with that being said, let's see what price does, right? As you can see, price was correcting, made a lower high, and then price started to come to the downside. So as you can see, you see price moving to the downside. There it was, it broke below, right? As you can see, price broke below that, right? Right. So price broke below, didn't really give much here on the 5 minute, went up to make a lower high. This was good. It was a good sign for me, right? And then price made a lower low and a lower high. You get what I'm saying? So this is below where I wanted to see price, kind of give me that. I marked out this lower low. I was like, okay, I'm gonna have my buy stop, my sell stop actually waiting at this area. So when I see price going to the downside. You know what I'm saying? So as you can see, and then price made that lower high that I was talking about. So remember, we had a lower low and a lower high being made, where price broke a higher low and made a lower low and a lower high. So now on a 15 minute, remember, and then on a smaller time frame, you have a price making lower lows and lower highs. That's the correlation between where you can find a trend and then the entry method, right? So now I have those confirmations. Obviously, my buy stop would have been triggered. My sell stop would have been triggered actually, and then we're just aiming for 1:3. And in this trade would have hit TP, but we were just 5 points away from TP, actually, right? So I was aiming for my 1:3, right? And then this is what price did. As you can see, price shot to the downside and started building some structure. So obviously, would have marked the structure. This is what I would have want to see price break below, right? But as you can see, price then started to, do his thing and then build structure to the upside. So on this trade, actually, I was able to go out on, break even. As price was doing what it was doing. I already saw price building higher highs and higher lows. So you must study structure as it does what it does. So I was able to go out on break even because price, as you can see, was building higher highs and higher lows, right? So going back, right? This is what ended up happening. Price did that. And then also did everything. Now I'm gonna show you the two other entries. I think that was yeah, that was, no, yeah. So on the 1 hour, as you can see, those who cannot mark their charts, yeah, I forgot to say, those who cannot mark their chart, you can use this indication by the loan sum, higher high, lower low strategy, right? Don't change the settings, just use it as is, right? So you had price making a higher high and a higher low and a lower high. That's when you got on the move to the downside. And that move also became an indication on a higher time frame on the 1 hour. That's why price then reversed to the upside. And then price may end up being a lower low and a lower high also, which is a low, which is lower than, I mean, is a high which is lower than the previous high, right? So end up making that. So we can then clearly mark this level where the indication came from, right? We could have marked, we then mark this level and then where the indication came from. We had the indication happening and then price giving a lower high, which price went up to correct, right? And then price, when it came down, this is where it broke out, right? So with that being said, we came down, moved to 15 minutes, right? So as you can see, when price was going, I was giving higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we want to see also a shift in market structure when price breaks below this level, right? So obviously, as you can see, price broke below these lows here, right? Then while price broke this higher low, which was made on the 15-minute trend, you can expect obviously price to sort of correct price before you can shoot to the downside. Obviously, going down to the 5 minute, you can then be able to look for those entries also on the 5 minute with a lower low and a lower high to be made. You get what I'm saying? So we then was able to use this also as some sort of an entry. You could have used this as some sort of an entry also, considering that is a lower low and then price made a lower high. You can then be able to, mark those lower low, lower high, and then as you can see, price started to shoot to the downside. So this is how your entry would have been. Lower low, lower high, stop loss just above the lower highs. And then as far as your your 1:3 is concerned, is your 1:3 would have been here. That's here. Yeah. So this would have been your 1:3. So price also, this is where I think price was also 5 points away from hitting our TP also. So price built the structure and then started to move to the upside. But regardless of that price doing that, what ended up happening is because of, the entry. Oh, yeah, the entry was it was hit. This one was hit actually because the stop loss was just above there. Because price now made a higher low to the upside. You know what I'm saying? Or the first one was the one that was few pips away, right? So price ended up making a higher low on a higher time frame when you go to the 1 hour. Remember, on the 1 hour, we had an indication where price made a lower low after breaking a higher low. You get what I'm saying? I mean, after breaking a higher low and made a lower high and then lower low, lower high. You get what I'm saying? So now price made a higher low on the 1 hour, right? So what that indicates that price might start to become bullish and you can expect price to come and take out these highs which are sitting here. You get what I'm saying? Which can come and take out these highs which are sitting here. So going to, like I said, on the 1 hour, let me just show you. Right. So on the 1 hour, as you can see, I'm not sure if it marked it, but this should be a higher low. Yeah, it didn't mark it, but as price was going, so this entry was complete, right? So as you can see, this entry made a higher low. So this indicator did mark it as a higher low, right? But then what ended up happening when price was going up? So on the 15-minute chart, when you go down to 15-minute chart, right? When you go down to the 15-minute chart, we had a shift in market structure from this area, right? We had a shift in market structure. Price was giving lower lows and lower highs. You know, you know, price was making lower lows and lower highs, lower lows, lower highs, lower low, and then price made a higher high, breaking these previous lower highs, which were made on a 15-minute. I'm not sure if, yeah, it didn't mark them, but it's still fine. It broke those, giving us an indication on the 15-minute that price might be going to the upside. Remember, we took it to the downside, and now it's giving us a shift in market structure. It broke structure, break of structure, or a shift in market structure shift, or a change of character, whatever you guys can call it, right? So price made a higher high and then came back to correct. So now we found a trend on the 5-15 minute. We can now drop down to the legs of 5 minutes. You get what I'm saying? So price went up, gave us, a higher high, and then came back to correct price, or give broke this out of this lower high, and then came down to retest price. You can, however you call it, right? So I then went down to the 1 minute because the trend is coming from 15 minutes. So I can then go down much slower, right? So I got to 1 minute and I realized that between these levels, price was kind of, re playing around, like, there's some sort of, whenever there were sellers, below this level where price would kick below down, or, bounce to the downside, or yeah, to go to the downside whenever it's under this level. So what I decided to see, I wanted to see price be able to break above this level with the high high and the higher low, because why? Already priced on a 15-minute trend, it is giving us a higher high, right? So that higher high price can down make a higher low. This would be the higher low on the 15-minute, and then we can look to take price to the upside on a 1:3, right? So I marked the first one, which was made. This one here, price made a higher high and then didn't make a higher low. It actually broke this higher low, which was made, and make a lower low. So it invalidated the trend. Broke again, made a higher high, I marked it, and then price made a high, went down to make a lower low again. You know what I'm saying? So it invalidated the trade. So I marked this, the third one. This is the third one that I marked. I included the wicks. Remember, it was to include the wicks. Mark this, made a higher low, higher high, higher low. So I was like, okay, since well price is doing that, let me have a buy stop waiting here, and then my stop loss just below this, And then as far as my 1:3 is concerned, this way my 1:3 would be. So as you can see, price ended up going my way. So now we can expect price, because price now broke above this 15-minute high, which also higher high, which was made. Price also gave us an indication we can expect price to come in correct. You know what I'm saying? So price then made a shift in market structure, made a higher high. You could have marked this, right? Okay, you want to see a higher low we made. Now price, what did price do? Price made a lower low. It broke this low, which was made a lower low. So it invalidated the entry. So you have to wait for another break of a higher high and a higher low being made, so you can look to take that trade to the upside. That's how we're looking at these markets. So that's how you can be able to spot these little things. Get a 1:3. You understand? You don't need to be riding the whole 4 hours or 1 hour move to a certain direction. You get what I'm saying? So that's how you can be able to, even on higher time frames, that's how you can spot it on higher time frames. So on the Hustle University, actually, uh, we have a checklist that I've always shared with the students, right? So we have a checklist. These are the entry methods that I was talking about. One price give you an indication above price. You want to see a higher high and a higher low below, above that price being made, and then you can take that to the upside. Same thing, indication to the downside, price going up to correct, giving a lower low, lower high. You want to see that being made also on a smaller time frame, lower low and lower high being made, right? So going down also, this would be, the trends. You can find the trends on the 15-minute, 4 hour, and the 1 hour. And your entries can also come from 15 minutes, 5 minutes, and the 1 minute. But when you find the trend on the 15-minute, you can usually scroll down to 5 and 1 minute to get those entries. So yeah, pretty much. And then we have, I was just breaking down some of the trading plans that you guys can make for yourself, risking 1:3 compared to a $10,000 prop account. It's not about passing the prop account, it's just building those good trading habits. So then when you get to a $100,000, funded account, you can see that the same 1:3 is $3,000 per trade. So you can be able to see those things. And on a good day, if you've passed all three, you've won all three trades, you are able to make $9,000. And if you lose two trades out of three and you win the last one or the first one, and you win the last one or the first one and you lose the following two, you're still up $100 on a $10,000 account, or you're still up $1,000 for the day. So it helps you with that. But if you lose all three, you're still fine. Tomorrow is still another day. You can still make up for it, the following day. So it's all about, having this level of disciplines, and also that shift in market structure that I was referring to on, on other time frames that can happen, right? So you're going to have on a higher time frame, price giving higher highs and higher lows. When it's correcting, price is gonna give you lower lows and lower highs, but it's gonna make that shift in market structure where it's gonna give you higher highs and higher lows. And when it breaks above price, it should give you a higher high and a higher low. You can use that higher high to take price to the upside. So this is how it will look on a 5 minute or 1 minute trend. So you're gonna have to be able to take it to the upside, right? So those are the kind of things you get to learn on a daily basis, because on the Hustle University we then have price, we have everyday sessions. We have a session, we all have a session during London. We also have a session during New York sessions. So we're able to look at those things, and be able to, and as you can see, let me just show you quickly. Um, this would be the higher high marked, and price, once price gives me a higher low, I can be able to take this trade to the upside. I will probably play on the next video just to show you that this did go up if price doesn't come and make lower lows, say lower highs and lower lows on the 1 minute. But I will definitely come show you on the next video how did this trade go. But because you can see, price is still, price is still making a higher low. So I just want to see price would lows and then make a higher low and then go to the upside. So this is how the trade would look like when price comes to those areas. You get what I'm saying? So yeah, pretty much, guys. This is how you can be able to get those ones to threes and clean ones, and you don't need to be in a session for you to be able to trade those kind of trades. Yeah, thank you for watching, guys. For those who want to join the Hustle University, we only have about we only have about we only have about 8 spots left on the Hustle University. You're gonna get daily live sessions, London and New York, live trading that we do, one-on-one sessions, group sessions, and ICC mastery course that is coming once these spots are full. And if you're wondering what's happening in there, we have people are guys, people are hitting TPs. Guys, people are doing it. People are getting, people are hitting those targets, guys. People are hitting those targets. You know what I'm saying? So it's all about them, and ensuring that they get to, overcome those fears, they overcome all those kind of things. You get what I'm saying? Understanding how to read the markets for themselves, so they can be able to do it for themselves, because that's the end goal, for you to be able to do it for yourself. So you don't have to rely on any guru, you don't have to rely on anyone for signals or whatsoever the case may be. You know what I'm saying? But thank you for watching these videos, guys. Thank you very much. And don't forget to like and subscribe. The Discord link, the free Discord link, is gonna be on the description below, and then you can join the free Discord, and then you can text me privately if you wanna join for the remaining 8 spots. And this would be for the whole of 2025. After these spots are filled, we're only gonna be accepting people probably next year, sometime in January, once the markets are fully back to normal. So probably might be even end of January. So that's when we can start, accepting people, you know. So yeah, pretty much, guys. So you can see this is not a bad play. The bad play is paused, nothing's happening. So this is just, the chart itself doing what it needs to do. You know what I'm saying? As I was saying, this is where my buy would be. My stop loss just below the higher lows being made. So as you can see, my stop loss just about 3 points, and then my TP would definitely be about 9 points on this pen, right? So yeah, thank you very much, guys. Thank you for attending or watching this video. Also, thank you very much. Bye, guys. And last thing, I'm not selling a course. I don't sell course. I'm not selling signals. This is pure mentorship to help you understand the markets, to help you be able to read the markets. Get what I'm saying? So no, we're not selling courses in the Hustle University. We're not selling signals. This is to help you, guys. If you find a signal, if we do find a setup while like doing something like this, and be able to see the setup, we can jump on it, right? We can jump on it. It's not a problem. We can jump on it, right? So it's not gonna be an issue to us, right? We can jump on it. But regardless, yeah, that's what's gonna be happening, right? Right. So yeah, pretty much that's where price is. I don't know what was happening. Yeah, my PC froze. So this is right. So pretty much, I was gonna be happening, guys. All right, bye.